Well, the market's starting the week lower. Joining me with more on today's action, Lee Munson, Chief Investment Officer with Portfolio Asset Manager, and Tony Dwyer, Equity Market Strategist with FTN Midwest Securities. Gentlemen, great to have you both with us.
Hey, Melissa.
Tony, let's start it off with you. I mean, obviously, we saw some declines today, but the bigger headline seems to be that the S&P 500 over the past 7 trading sessions up more than 7%. What do you make of this rally here?
Well, I think that's coming with the initial response to improvement in corporate paper. And again, the economy, the global economy flows with the movement of credit, and the corporate credit is starting to move a little bit. I think, Melissa, the playbook that's going to happen here is going to be similar to that happened from the October 02 low to the March 03 retest, where initially in the first 6 weeks of the rally off that October 02 low, corporate credit, high yield debt to treasury spreads came down a little bit. Equity prices jumped 20% over 6 weeks. And then as credit continued to improve, equity prices came within 3% of their low on the S&P 500, because ultimately not everybody's going to throw their money back at the market at once. They're going to be hesitant because it's up more than 20%, and B, they got hurt. So if you're going to buy the corporate paper because it has equity-like returns, where are you going to get the money for that? And that's either some cash from the sidelines, but you're probably going to go and sell the lower part of the capital structure, which would be equities.
Right. Lee, what do you make of the rally, and are you getting a little bit less defensive these days, i.e. embracing risk, buying more stocks, buying maybe some of the riskier areas of the stock market?
Oh, absolutely. You know, we have, over 5% positions in high quality names like General Electric, Johnson & Johnson, Altria, but we really don't see those making a lot of money in 2009 unless you're committed to trading around those core positions, which is what we do at Portfolio Asset Management. What we think that people need to be cautioned by is by getting too defensive, too blue chip, you may end up not really making a lot of money in 2009. We ultimately believe that you got to add a little pepper to the portfolio to get some performance out of 2009.
And Tony, last question here. What are your best picks at this juncture in terms of equities?
Well, 2 weeks ago when I was on, Melissa, I said that at S&P 1000, I would rotate a little bit more defensively. Again, I believe that we will have credit improve, and we'll still retest the lows at somewhere near 750 to 800 on the S&P. So again, I think we'll have a chance to buy near to the lows with the knowledge that corporate paper is dramatically improved.
Okay, Lee, Tony, thanks so much for your time. We appreciate it.
Thank you, Melissa.
Thank you.